It's Columbus Day here in the U.S., but the equity markets are seeing strong gains. Keep in mind that we saw the pop in crude oil futures with WTI trading above $50 a barrel. Joining me today is Chief Market Economist Peter Cardillo at First Standard Financial. Peter, thanks for joining me at the beginning of the week.
Good to be back.
Well, this is a post-election debate day, and we're seeing gains in the equity markets. We have to keep in mind that the bond markets are closed, and we have plenty of headwinds going forward. But first and foremost, what do you make of the jobs report?
Well, I think the job market report was rather solid. I mean, even though the creation of new jobs was inferior than what we were looking for and what the street was looking for, but still, if you look at the report in its entirety, you'll see that we saw wages go up a little bit, and of course, we saw even the work week. So it's been consistent, and the fact that the economy continues to grow jobs at about 192,000 for the past 6 years, that's an indication that it was a solid report.
And Peter, when we're looking at the jobs report, of course, it's all about what this means for rate hikes. We do have the election coming up in less than 30 days. So what do you make of the rate outlook right now?
Well, I think the Fed pulls the trigger in December by 25 basis points. And I think that, after that, they probably pause for a quarter or two and take a wait-and-see attitude.
And Peter, we're also in the final quarter of this year. We have earnings season kicking off tomorrow after the closing bell. What's your outlook?
Oh, I don't see much changes from the previous quarter. I think that most companies will meet expectations, even though those expectations have been watered down somewhat. And that's been basically the story for the past 2 years. So I think, investors are not really going to be getting any earnings surprises, and that the market is probably just going to trade off of the prospects of the elections and, of course, oil prices as well.
And therefore, since we're talking about oil prices, we saw the front-month contract for WTI as well as Brent rise in today's session. And this does come on expectations of what will happen in terms of production and output. But what do you make of the latest comments, and what will we really see?
I think we're getting close to a solid deal coming out of OPEC. I think this time it's going to stick. Over the weekend we heard finance ministers talk about oil, especially from Saudi Arabia. And of course, this morning we got comments out of Putin, who basically said that, he is willing to join in the talks and probably cut production. Now, whether or not we get a production cut or whether we get a freeze, it's looking more like a production cut. I think the price of oil is going to go higher. I think we'll probably trade between 50 and 55 in this quarter, and then $60 probably in the second quarter. Now, when I say those levels, I mean that will be a range of where oil prices will be. And of course, I think it's imperative for OPEC to take action. Otherwise, they're going to face a severe financial hardship and an expanding geopolitical problem.
Well, Peter, we'll talk next week, and we'll see where crude oil futures are trading then. Thanks for joining me today.
My pleasure.